How's it going, everybody? My name is Julian with the Academy of Thought, and today's video will be about what the basics of making or charting a stock. So what are the first things that you do when you chart a stock, and then different things to look for when deciding what is a good stock to trade and what is not a good stock to trade. There are hundreds and hundreds of stocks available for you to trade, but to be a successful trader, you must trade the stocks that fit your criteria for trading. So I'll go over that in future videos, but to start, we're going to start with the very first thing that every trader does before they take a trade or before they look at a chart. The first thing they do is look for things called support lines and resistance lines. So a support line is basically the bottom where the stock is going to come down and it's not going to go any further. Think of the support line as the floor. The support line is the floor and the resistance is the ceiling. The stock's going to come down, hit the floor, an area where it will bounce and move up. Now, supports and resistances are not always 100% places where the stock will bounce, but they give a good idea where there will be a lot of buyers at supports and a lot of sellers at resistances. So basically, if a stock's support is at $50 and it shows on a chart, I'll show you what it looks like on a chart later, but basically you can identify a support. Let's say it's at $50, the stock is at $60, and it starts to move down towards $50. Well, because it is identified as a support at $50, that is where buyers will basically pile up at that $50 mark because it is seen on a chart as a support. Like I said, I'll show you later in later videos on the Thinkorswim platform, and it will make more sense to you. But to start off, basically, a support is where a stock will likely bounce at its low point, and then a resistance is a price above that where it won't break. Now, something to understand is that if a support is ever broken, that will become the new resistance. So if you think, let me draw it on a piece of paper to give you an idea of what I'm talking about. Like I said, later in the future videos, I can show y'all on charts just so it makes sense. But I want to make sure everybody has an idea before they're looking on TD Ameritrade, just because I know it might take some time for people to get that started up. So a chart, a stock goes like this. Okay, here we go. So this is basically, let's say this is a chart here. Okay, now the stock price, ooh, I can't do this. Okay, hold on. Okay, so you see here, let's say this is where a stock currently is at its price. A stock is going to move down. Let's say this is $50. This line is 50, and this line is, let's say, $70. Okay, so you have a stock here. Let's say the support is at $50 and it's trading at between 70 and 50. A stock, let's say it's moving down, it's going to move down, and here is where buyers will step in because buyers know that this is the support line and they're going to buy the stock near the support. Then the stock moves up and $70 is a resistance where the stock peaks out at because it hasn't been able to break this. Let's say that this is the chart. The stock came up, could not break 70, so it's now a resistance. It comes down, doesn't break 50, so that's considered a support. Comes up, hits this top, considered a resistance. Comes back down. This is the support level at $50. Then let's say it moves up and it breaks past the resistance. Well, now that resistance will become a new support. Like I said, I'll show you in more videos how this works on charts and you'll be able to see it better. But basically, if a stock breaks through resistance, that new resistance becomes new supports. So something that's good to write down or understand is when stocks break resistances, those previous resistance levels become new supports and vice versa. Let's say a stock breaks the support to the downside, that old support level will become a new resistance. Basically like this. If this stock came down and broke, let's say it broke to the downside instead of bouncing and going it back up. So forget this. Let's say it came down, broke to the downside, and it comes back up. This line here, which was the previous support, will now become a new resistance. That's the first thing to understand. Supports and resistance levels. So every trader always looks for supports and resistances when creating their charts. This gives an idea of where buyers will get in at the support levels and where sellers will sell because of resistance levels. You see, the market is driven by fear. So when a stock is getting up to a price of resistance, everybody is fearful that it won't break that level, so then the stock sells off. This is what happens, and this is how patterns are created. And then I'll go over volume. So volume in a stock is very important for traders because high volume equals liquidity. What is liquidity? Liquidity is the movement of stock and how liquid it is. So if a stock has a very high liquidity, it means it is able to move up and down and the price is able to fluctuate. Whereas a very low liquid stock doesn't have much movement. So we want stocks with high liquidity because we want stocks that are moving, and we want stocks with high volume because we're able to get in and out of a stock without any issues. You see, on the stock market, you're trading against other traders and machines. I'll explain that later. It's called not institutional. It's called high frequency trading. And we want to avoid any stocks that are being high frequency traded. So a volume is a good indication of whether a stock is a good trade or not, because a stock with high volume means we are able to get in and out of a stock very easily. And because we are trading with other people, let's say you buy a stock and there's not enough volume, there may not be buyers, but you always want buyers. So good volume equals a good stock to trade. I'm going to keep these videos short just so I can make a few of them, and you can go, if you can, watch these videos on your own time, take notes. So that's going to be the end of this video, and I'll move on to another one. My next video, I'm going to be showing you the Thinkorswim platform, and I'm going to be explaining things on there because I feel like it would be easier to see support and resistance levels, and you'll get a better idea of what I'm looking at. So please, if you can, make sure before you move on to the next video, make sure you have downloaded the Thinkorswim platform, and then I will go over, I'm going to show you some different charting stuff. You can write in your notes what I'm charting and any notes that you're taking, but it will be easier if you can follow along and chart as well so that you're able to learn much faster. Thank you guys and girls.